Hi guys, it's MJ Lux here. I'm benefiting from just having had an interview, so I have a tie on. So I'm gonna reply to some of the questions live, and I'm gonna provide a bit of a weekly update. I want to talk to you a little bit more about what's my strategy in the down market. So when you have a downward spiral, I've been hedging quite a lot this week, partly successfully. I mean, we are up on TZA. We're a little bit down on the VIX, but the portfolio was largely, managed during the week. It was quite tough. It's very tough to actually short and protect the portfolio. I am extremely surprised that many of the popular investors don't do it. I believe it comes with lack of experience. They don't really know how to use the shorts, and obviously it's a very difficult instrument, and also it incurs fees. So it's difficult to build a very well performing portfolio, but it is extremely important from the risk management perspective. We have actually been gaining copiers because of that, because the markets have been more difficult and people fly to safe haven. We have a risk of 4, close to 3 now with the diversification and hedges we have now. So that's been very good. But I actually replied to Henrik from Norway in 5 points. And I thought I'll actually cover that points on the video as well. So how do we cover? Just to be sure, we are about 1.3% up today on a day. TRXX is skyrocketing. They just announced that they are building a facility that will be used for commercialization in Amsterdam. So that's fantastic news. Zach wrote an article about them, about the momentum. So they're about 9% up, and obviously that's big up for our portfolio. Probably will end up hopefully around 1.5%. Let's talk about shorts and hedges and these instruments that protect the portfolio. So first, hedges. What is a hedge? Hedge is basically covering your risk for the portfolio. So if you are long, many of you are 100% long, which I just consider irresponsible, but let's say we are 80% long and we may decide to be 20 or 10%. Usually I try to be maybe 10% with leverage. So we have the effects of scale, kind of the rapidity of the growth, should the hedge be important. And basically it's hedging your risk. So if you're long equity and you then short an index or short an equity, you're basically saying, okay, if it goes down, I will lose on the long, but I will gain on the short, and that will reduce my overall loss. So that's basically the idea. All companies do it. So practically every big company will have an FX hedge. So if they earn in dollars, they would hedge on the strength of the euro, and so on and so forth. So even you maybe having dollars here in the account, you may want to hedge a currency risk. If the dollar depreciates, so you may want to take a position on that. So this is basically a hedge. And as I replied to Henrik, we have VIX, which is a volatility index. We also built successfully TZA, which is an inverse correlation to Russell 2000, so the small cap. And yes, they open a pretty big short on SPX. Standard & Poor with leverage. And actually this is also will be a little bit of the focus in the coming weeks and months, perhaps. The indices actually allow me to do better job in terms of technical analysis, so I can see the levels, and also I can cut the loss short maybe at 2-3%, whereas the VIX will sometimes open at -4% or +8%. So they open in New York at 15:30 or 14:30 London time. So that's a little bit difficult. So perhaps we will actually move to indices, since we are spending full time on the markets. And then I already have an S&P, but it exits about 3% if it goes down. So now it's fighting a little bit. We've been 1% up. Now we're 1% down with a 5x leverage. So if it goes against us, if it actually crosses a very important technical level, go breakout, then we will immediately sell it. So that's a bit easier maybe on a short-term leverage position. We'll keep VIX a little bit for longer. We have reduced, we shorted via Ultra VIX as well. I offloaded that at the open today. The markets are up, so we will not be fighting with it. Reduced slightly the TZA with one position. We have 3 equal positions, so one of them I will let go. We keep the other two, and we keep the other two VIX, and we keep the SPX, as I said, until the stop loss. But this allows us to, okay, we lose a little bit. Maybe on a day we would have 1.5%, and now we have 1.3%. But believe me, when it goes down, I've seen popular investors losing 5-6% on a day this week, and we had two massive red days. So I've seen people losing 15%. Well, we did lose 4%, 2% and 2.5%, so 4.5-5% actually if you compound it, but 5 and 15 is a big difference. So and especially we have a lot of stocks like TRXC, BNGO, and ENPX and HTBX. So these have been volatile. So it's actually we have relatively volatile portfolio. And even then, when TRXC goes 13% down, it's our biggest position, we are only 2.5% down. So this is very, very important for the hedging. If you're not an experienced investor, it can be quite difficult for you, but I will always hedge. I've always been hedging, and via Tesla, via Jumia, and also, so let's talk about hedging via shorts. So at the moment we are short on Snapchat. We have just read that a lot of insiders sold stock. One guy sold 5 million worth of stock, another guy sold 2 million worth of stock. Again, it's very difficult to short them. It's actually Snapchat going up today for, I don't know why. I mean, together with the market, I assume, but the company is worth almost 100 billion. It's almost double Twitter, and it has half of the revenue of Twitter. And when I see TikTok or other companies in a similar space, Instagram has its story, it belongs to Facebook. I just don't see the company such as Snapchat growing. But again, very often it goes against me, which is bad. It loses us a little bit. But then again, if we started going massively down, overvalued companies will go 20% down or something. So we will actually make a profit. So that's also what's called a short. I am looking for good shorts. We have moved into, so that's going to be a third point, cash. We have moved to about 30% cash. I would even go towards 35-40%. If the markets continue to go up, we see a limited upside potential, and we still participate in the growth, which is great, because if we just went on cash and hedges, we'd probably be on minus, whereas we are over 10% on the month, which is phenomenal. We are 20% in January, 10% in February, so over 30% on the year. But we like shorts. We've done it successfully with NEO. We've been half successful with Tesla. We've been shorting other stocks. If I kept Sorrento and DDD, we would have made a massive profit. But all of this also protects the portfolio. This reduces the risk. It's very important for risk management. And again, I'm just surprised that people don't do it. I guess they don't like to incur fees, and it's too stressful for them. But for me, for effective portfolio management, it's very, very important. So cash, usually we hold between 10 and 30%. I see that now the strategy, with VIX, has been difficult, and TZA, because they can open very badly for you at the market open, where I usually either double down or short or reduce the position at 14:30 when the market opens in New York. But we will move more towards cash. Shorts on indices, leverage. If they go against us, we will exit with a stop loss. If it goes for us, we'll actually make quite a lot of money. So we'll move to that strategy a little bit more. And cash will allow us, if the market's tank, let's say 10, maybe 15%, maybe 20%, we will be able to then pick. So let's say if we like Ørsted, we like Federal Express, Upwork, and CNC. These four companies we sold yesterday. All of them we had either small positions or they were close to zero, so we closed them. So actually 11 positions, liquidated them entirely. That allows us to be more focused. I'm only keeping those firms that I think will go 30% and up. If something looks at 10% up, I don't see the risk. For me, it's not good enough. Maybe it will grow, maybe it will go down. So I don't see the very good ratio. I like heat. We bought more because it can go to 40-50. It may maybe go down another 10-15%, but again, the ratio is fantastic. So that's always in line with Black Glitter model from Goldman Sachs in '92. This is part of our strategy. So cash is very, very important. Another one is also diversification. So we are not like other investors 100% in US tech. This is incredibly risky strategy, even if tech is relatively resistant. We think it's quite irresponsible to be in a position like this. Any retail investor can buy a Nasdaq and just be done with it. So we will not go to that. So we have a lot of stock in the UK, a lot of stock in Europe. We're actually big on India. We're big on Brazil, and we've started buying a lot in China. So Xiaomi went 8% up today. We had a beautiful 9% now in over 3 days, I think, in China Tower, with a very big, we have it here on the screen, a long-term growth potential. So that's very, very important. So number 4 was diversification. So first hedges, second shorts, third cash, fourth diversification, and fifth stock picking. I think stock picking will become even more important now. The markets are closer to what they normally are. So the decisions such as TRXC going 1,500% up, same for BNGO, same for a lot of other stocks. What we did with Aston Martin and Porsche, been very bullish on it, explain why we were 100% right for the last 12 months on those stocks. There will be more focus on that. So it's actually a lot about choosing the right company. We quite like Peloton, for instance, picking it up on the deeps and just investing in the companies that are very, very good and will be long-term growth. So some of the bad companies or not so good companies will probably suffer tremendously going forward as the markets are being a little bit overheat. And so stock picking will be very, very important, cherry picking, just picking the most important stocks. So it's important that the best stocks will go up while the markets go down. So here you have it. 5 strategies to be prepared for the downturn. Very grateful to all our copiers. We crossed 1,400 yesterday. We are oscillating around that today as well. 3.3 million of asset under management. So massive thanks. I am planning to raise 30 million. I'm already planning to go to Luxembourg in April to start raising even more funds. So stay tuned. There will be more conferences. Results speak for themselves. So I'm glad that more and more people are noticing. And I'm super happy that people also decide, many of you also decide to stop trading on your own because it's getting very, very risky, and move a part or whole portfolio for me to manage. So very, very grateful. Welcome on board. Have a good weekend and speak to you soon.